Hi guys. So today we're going to talk about FHA loans. So you probably heard about it. A lot of people talking about FHA right now, but I want to give you more details without extra unnecessary information, just to give you straight, honest answers about FHA, what it's good for and what it's not. To give you all the basics, how it works, and what are the benefits. So FHA originally was introduced in 1934 by the government to stimulate the economy so people can purchase more properties and buy homes. It was a long time ago. Now everybody knows FHA is usually people who get FHA is first home buyers who like to put minimum down payment to purchase a home. So this is a great option. It has its benefits. So we'll go one by one. So what's FHA good for? You can only buy FHA if you're gonna live in the property. If you're buying owner-occupied property, you're gonna live in it. You cannot buy it for investment or second homes. So if you plan to live there for at least 12 months, then FHA is great. Another thing, you have to have a job and a credit score. So minimum of 2-year history, the lender will check. So many people, for some reason, think that FHA was created for low-income families, that you can show low income and qualify for FHA. It's not correct. FHA, it gives you benefits because you can do lower down payment, you can have lower FICO score, but you need to have enough income to qualify. So basically, the lender will use whatever income you make, and with that income you're going to qualify. If you make less, you could be qualified for a smaller amount, but if you need more, you get in for a higher amount. So remember that there's no kind of special things for people who buy first time or make less, because FHA is not a first time home buyer program. It's like a good marketing thing, but overall FHA is done for people who buy a primary residence. So if I own 3 homes and I buy another home that I'm gonna live in, I can use FHA loan also, just so you know. And by the way, by lender guidelines, first-time home buyer means you didn't own any properties for the last 3 years. So it's not technically first-time buyer. So as long as you don't own anything for 3 years, you consider again a first-time home buyer. With FHA, you need to show enough income, like I said, and the lender will look at your employment history. So if you're W2 employee, and they're gonna check your history for the last 2 years. So even if you work multiple jobs and you had some gaps in employment, that's okay. As long as you have to just show them what you did for the last 2 years. They wanna make sure that you've been working for the last 2 years, even with small gaps. If there was some unemployment due to COVID or something like that, they're okay with that, just as long as you show your total history. If you're W2, they're gonna use your current income that you make currently on pay stubs. So let's say if your previous income was lower and you got a new job that pays you more, you can use that income to qualify. If you are self-employed person, they also gonna use 2 years of tax return. It's always 2 years with FHA. So whatever you make, they're gonna average it out. So how self-employed people are looked at is if your income today was, let's say, $50,000 a year, and next year is 100,000, if it's going up, that's great, but they're gonna average it out over 2 years. So they're gonna say 50,000 plus 100, gonna be 150 for 2 years, and they're gonna divide it by 24 months. And with that, you're gonna have your income. If it's another way, if your income goes down, so let's say this year was good, but next year is low, they're gonna go by the lower income. So with self-employed, banks are usually kind of more cautious and calculate your income not to your benefit. But this is how the system works. But that's only for FHA. There's other programs that counted differently. So again, so you agree we got your income. Next is credit. So credit is important, but the good thing with FHA, you only need minimum of 550 FICO score. With any other programs, you will need much more FICO, like 620, 640 minimum. FHA allows you to buy it with 550, which is great. If your credit on a lower level, they're gonna check if you have any collections, late payments, whatever it is, that's okay. But sometimes they might ask you to pay off some collections if you own any. But again, it's all case by case when we run into the FHA system, and it's basically automatic thing that tells us, yes or no. So with credit, again, very important to have, but good thing that you can have a lower FICO. Also with FHA, you can use multiple people. So let's say a family that's planning to live together. So let's say husband and wife, and they got a kid that over 18 that works. We can use income from everybody and make sure that the family will qualify. So it's not only one person. Whoever gonna be occupying the property, if it's a grandma or uncle, whatever it is, we can combine income from 3, 4 people, 5 people, and make sure people will qualify with that. We see it a lot of times when the family buying it together, moving in together. As long as we can prove the family will live together. If it makes sense for the bank, you cannot show that, you're going to live with another family that's not related to you. They can make sure that you're going to live together. So this is based on income and credit.